Hello breakers, it is February the 12th, 2023 and I say welcome back to another weekly market update on the S&P 500. The big question for me today is, will we see a surprise on the daily time frame, or will we go for our lower target box first of all? We could push up in the week, then push down, and then the big question mark arises. Is this liquidity still up for grabs, or will we head further down for a bigger pullback? All of that and more we will unpack in our video today, of course. What we already hinted at last week, and which really turned out to be true, is that yes, it was not the moment to long. We did indeed reject at our weekly target box, and we had the warning signs pointing to exactly that development. Remember our fear and greed index. Last week we already had an extreme fear posting at 79, and we pushed into that region again on February the 7th, Tuesday last week. And look at what happened on Tuesday. One more push up into the weekly target box before more rejection. Finally, there are 16 more days in February, and our claim that February is going to be a crucial month still holds true. So where do we stand on that front? Let's unpack it bit by bit. Let's go through the charts, starting with the monthly chart. Looking at the monthly chart and putting on our monthly levels, at the moment it indeed looks like we did reject here at this monthly liquidity pool above 4,180, which also lines up, if we have a look at our monthly target boxes, with a rejection from the monthly target box starting at around the same price level. Obviously, if we pull down back further, where could we expect to find some kind of reaction? Let's put on our fibs, anchoring them obviously at the January closing price so far, because we don't know where February is going to close. If we then mark out our monthly bullish target box, it starts at around $3,783. And that obviously, if you have a second look, is really interesting. Why? Because we find quite a lot of monthly liquidity resting just in this area. Let's therefore also mark out this first pool of monthly liquidity at around $3,815. And with all of these levels in mind, move on, zoom in to the weekly chart. First of all, let's hide our monthly levels and monthly boxes to not clutter the chart too much here, and then have a closer look at the chart. Well, the first thing that strikes my eye is this inside bar candle, meaning uncertainty. We don't know which way the price is really going to go. If we add our weekly levels to it, we can see that yes, the weekly downtrend still remains unbroken. However, the price level of the latest higher low on the weekly is 3,987, and this is where it becomes more interesting and more actionable for us. Let me show you why. For that, again, our weekly target boxes. We did reject, we already know that, but right smack underneath this level of 3,985, we have our current weekly target box. Let me show you more exactly. If we take this anchor point and the closing price at around 4,150, bam. The weekly target box starts at around 3,970, right underneath this closing level, and this is what we want to mark, obviously, lining up with weekly liquidity at around 3,963. So could it be that over the course of the next 1 or 2 weeks, we're going to attack these levels, the liquidity resting underneath this weekly low, enter our target box here, and then use this target box as a launch pad to attack the bigger downtrend and maybe even break it? Overall, it seems pretty clear to me that on the higher time frames, we're still range bound roughly between this high at around 4,330 and the absolute low we put in mid-October at around 3,500 or 3,600 roughly, if we take these closing prices. Personally, I think to be really able to say, yes, we are in a bullish environment again, or the opposite, obviously, we need to see one of these boundaries be broken. This still is quite a bit off. However, doesn't mean we can't take trades in between. We simply have to move on to a lower time frame for that. So let's have a closer look at the daily time frame then. Looking at the daily chart, you first of all might ask yourself, why did we not get this last push above our high at around 4,210 into this weekly and daily fair value gap, more inside of this bigger weekly target box, but reject beforehand? You know that I personally was hoping for this last push up deviation above the high. However, I also believe that the signs really were there for us to understand that no, we won't get this push. Let me illustrate that a bit further on the lower time frames. If we move down to the 2-hour time frame, or maybe even the 1-hour time frame, each time we see that on Tuesday the 7th, so last week, we had our third rejection from this bigger resistance block daily liquidity above us. Not only was it simply the third rejection, if you pull your fibs from the high down to this low, you can also see that we did reject right inside of our bearish target box above the 618. And not only did we reject within our target box, but also if we put on our cheat sheet indicator, we also rejected on double momentum on the lower time frames. So 3 reasons already to be absolutely cautious around these areas. And then if you factor in that we had an extreme greed reading on the fear and greed index on exactly Tuesday the 7th of February as well, you have your 4th reason to expect a rejection. A crucial question for us to answer with respect to this week then obviously is, are we still in a daily uptrend, or has this uptrend been broken? Personally, I think the argument could be made for yes, we're still in an uptrend, and no, the uptrend has been broken. Why? Look, the latest lower high on the daily on the closing basis, 4,037, still remains unbroken. However, yes, we have started a daily downtrend. So the question then is this downtrend that we have started just a bullish pullback in the bigger picture, or really the beginning of a reversal for lower prices? What is your take? Comment below. Tell me, how do you define an uptrend? When do you say we are officially in a downtrend now? Let's assume for a moment that indeed we are only looking at a bullish pullback, so to speak. Could it then really be that we see a little push up at the beginning of the week, maybe to fill this daily fair value gap that has formed? And then push further down into our daily target box right around the weekly level that we've just outlined, to finally, and that would then obviously be the big surprise, push up further to still get the liquidity that we were talking about last week, maybe even attack the bigger downtrend. Or once inside our target box, will we not be able to build up this momentum to push back up and have a further or see a further decline down to our second target box, lining up with the weekly bullish target box? And this for sure, I would say, should then at least give us a pity bounce. If you have the time to monitor price action on a lower time frame, I would highly recommend you have this fair value gap on the daily chart on your chart and monitor price action there. Otherwise, you can implement another chart that may give you a hint, the DXY. Switching over and looking at the DXY here, zooming in a bit more to illustrate what I mean a bit better. We see that yes, we are inside of a bearish daily target box that we outlined 1 or 2 weeks ago already. And now for me, the question is, can we push up to this level of daily liquidity? Or will we push down to this level of daily liquidity first of all? If the DXY pushes further up to go and get this liquidity, personally, I would then on the SPY favor this move down to get daily liquidity down here. If, however, the DXY goes for the daily liquidity underneath 102.65, first of all, I would expect exactly the opposite to happen on the SPY. With all of that information, you should now have different scenarios for the coming week ready. What is your task to do now? Set your alerts, be ready to act whenever you find a setup that fits on the lower time frames, and also don't forget to subscribe, help me support the channel. Looking forward to our next video. See you then, bye bye.